Hey, what's up, everyone? This is David Greenspan, and I welcome you back to Season 4 of the Mindshare Podcast. Additional podcasts are available at mindshare101.com and on all the major podcast platforms. This week's episode is sponsored by Kit's Keep in Touch Systems and the Buzz Conference. Be sure to follow The Buzz on Instagram at The Buzz Conference and give them a visit at www.thebuzzconference.com to keep up with everything that they are up to. The next event coming up is called the Queen Bee. This is where the Canadian Women's Council of Real Estate Professionals are coming together on April 22nd at the Biocca Hotel in downtown Toronto. Be sure to check in with The Buzz to get your tickets, but don't wait, as the event may already be or is about to be sold out. We are proud to have the Buzz Conference as an ongoing sponsor of the Mindshare Podcast. Kits is also with us today as a sponsor, as always, and I have to tell you, our team keeps coming up with new ways to make this powerful marketing system even more powerful. I mean, it's one thing to use, a bright, shiny CRM because other people are doing it. It's a whole next level when you use a CRM, which has a complete suite of marketing tools tied right into it. No need for third-party providers, no need for separate email blast systems. All your social media tiles are built right in. Websites and landing pages, an open house registry tool right in your CRM, the most effective keep in touch tools to help you build mindshare. I mean, seriously, Kits is loaded and you need to check it out if you haven't yet. I warn you though, once you check it out and start using it, you're going to be hooked. I mean, I guess that's not much of a warning as much as it is a little bit of a lot of friendly advice. Check out Kits by going to my site, mindshare101.com, and clicking on Marketing. As you know, we are on a push to get to 100 reviews on iTunes, and so I'd like to ask you, if you haven't yet, please take 2 minutes to rate the show, leave a review, and hey, we're making this super easy for you. All you have to do is go to ratethispodcast.com/mindshare101. And as always, thank you in advance. Today's episode is number 176. An accomplished, award-winning professional, her 20-plus years in the financial services sector has provided her with a unique understanding and perspective of the needs of her clients. Her experience is only outmatched by her relentless passion for helping clients either achieve their dream of home ownership or helping them navigate through the tough financial times in their lives. She has aligned herself with one of the largest mortgage brokerage companies in Canada and has equipped herself with the most extensive resources with access to all lenders and options available in the Canadian mortgage market. She says, making dreams come true and making nightmares go away is what she does every day. This week on the show, I am joined by mortgage broker Lucy Biocca. Lucy, welcome to the Mindshare Podcast.
Thank you. It's so awesome to be here. Thank you for that wonderful introduction, David.
Yeah, it's awesome to have you here. In fact, it was awesome to see you a couple of weeks ago at the Buzz Conference. It's incredible to think that we're already 2 weeks removed from that conference.
I can't believe it's already 2 weeks.
Oh my God.
Insane.
How awesome though, right? So many people there.
There were so many people. There were so many familiar faces. There were so many new faces. And it was just so wonderful to be out with people again. It was such an exceptional day.
I know. Sure. How was it for you though? Was there a lot of people coming by? Did you get to have a lot of conversations with people? Yeah, busy.
A lot of conversations. It was super duper busy. We all needed coffee.
Oh my God.
So it was pretty amazing though.
That's right. Yeah, the espresso machine going on.
Yeah, that is.
That's amazing. What would you say to anybody who didn't show up? Did they miss a whole bunch?
You know what? You missed a tremendous conference. What I love about the Buzz Conference, first of all, I'm the hugest fan of Virginia. What she does and how she brings people together is absolutely just mind-blowing. But what I love about the Buzz Conference is whatever stage you're at in your business, whether you're new or you've been, a realtor, an agent or a broker for 30 years, there's always something to get out of it. It's just insane. If you've missed it, you have to make the next one. You absolutely have to.
I was having a conversation with somebody this morning who was there, and he was also at another event in Vegas just about a month ago. And I mean, the event in Vegas was way bigger, but he was at the Buzz conference. He said, Dave, I took so much value away from this event. It was amazing. And he had great things to say about it. So I thought it was awesome just being able to get together, being there with people, being able to smile and shake hands and take selfies and do all that other stuff. It was a lot of fun, but yeah, it was good to see you. And it's good to have you here.
Thank you. Thanks again.
Let's do this. I want to talk about achieving the dream of home ownership. And I say that, and I want to preface this and say, this is for people who aspire to be homeowners. But this is also for people who are homeowners, but they want to get to that next level in whatever that means for them, right? So right off the top, how does that last week's BOC announcement affect people?
So the one from this morning, there is...
See, it's funny. I'm going back to yesterday. Or no, Thursday last week, I believe it was. But anyways, this morning too. Yeah. I mean, just there's a lot going on out there, rates, etc. Talk to us about that.
So there is so much volatility right now with rates. The most important thing to do, honestly, for realtors, for clients is align yourself with somebody that understands what is happening. Now, honestly, I always say if I had a crystal ball, I would be a very, very, very financially rich person. I feel myself very rich.
You too, eh?
But in all honesty, I mean, we don't know what's going to happen with the rates. There's how can I put this? There's speculation. There's speculation everywhere. You've got the media saying, "Oh, rates are just going to go, completely out of control," and yes, they're going to go up. It is what it is. I mean, realistically, and I say this aside from even looking at the economic factors of what are taking place, did we really expect 2% rates forever? We've had them for the last 10 years-ish.
I agree with you.
Right?
I agree with
you. Did we really, I just look at that from a realistic perspective, come on.
Well, it's true though. It's what goes up must come down. What comes down must go up. I mean, the reality is there's not a lot further down that it could have gone. So we are going to see things going up. But, I think that's got some long-term impact on, decisions that people are making today versus what could happen down the road. I mean, okay, here, as we talk about rates, how much further are we projecting? What's the deal with the next 8 months, sort of the end of 2022, but even into, the next 20 months, end of 2023. What are we seeing here when we look at the rates? What are we projected to get to?
So
any thoughts? I know it's not crystal ball.
Yeah, no, with regards to a 5-year fixed rate, we're approaching, if not at the 4% mark. Okay. I mean, that is what it is. I'm a huge proponent of variable rate, even in a climbing interest rate environment, because throughout all of history, and you can go back and you can have a look at what the rates were, what they are, where they're going. But variable rate has always been less expensive, even in a climbing interest rate environment. Now, with that being said, if somebody is going to sleep, if somebody's going to wake up in the middle of the night going, "Oh my God, I'm in variable rate, where are the rates going to go?" and they're going to lose sleep over it, don't bother. Mm-hmm. Get into your fixed right now. The challenge that we're finding right now is that with fixed rates being at 4% and variable so as of this morning's interest rate increase, prime is now at 3.2%. Most of us there are quite a few of us that have taken advantage of variable rate. We're at, prime minus 0.9, prime minus 1. You're still at 2.2, 2.3%. It's a phenomenal rate. Now, even if you're getting into the market right now on a variable rate, and the spreads, I don't want to go into too much detail with what's happened with the spreads and that sort of thing. But in a worst case scenario on a variable rate, you're still looking at a rate of 2.7% right now.
Right. I was having this conversation with somebody the other day, exactly that, and they were asking me the same thing. And again, I don't profess to be I've done my education with mortgages and certified and all that stuff, but I do not practice, so I don't profess to have the knowledge anywhere close to what you've got in terms of advising people on this. Mm-hmm. But in talking with people and understanding this whole thing, I was saying very much the same. Variable is where to go right now. Now, it's not a long-term thing, right? That's maybe a 3-year that you take there and you sort of watch what happens over the next 24 to 36 months.
Yeah,
but my thoughts were the variable's the direction to go right now.
And the reality is, we're going to pay that amount of interest. It's going to get up to 4%, in my opinion. Okay. It's going to go up to 4%. Do you want to start paying 4% now, or do you want that to eventually go up?
Right.
Right.
Because you're still in a better position with the variable right now.
Pardon me?
You're still in a better position taking a variable today, right?
In my opinion, you are. I've got clients calling, do I lock into fixed? Do I lock into fixed? I'm working out all the numbers because at the end of the day, it's about dollars and cents. It's about cash flow. Canadian, the dream of home ownership is that it's a dream. People will not go to restaurants. They'll, buy a less expensive car, but they will always, always, always make their mortgage payment. It's what Canadians do. So at the end of the day, it's figuring out a way to make that mortgage payment.
Well, this is okay. So the cash flow thing, and I want to get into that part of the conversation, but, I guess kind of going through a timeline of this, because you say cash flow, and we talk about buying power, and we talk about making these mortgage payments, or what are we giving up, or what are we not doing? Just on that, just before we take off on the topic of fixed versus variable, I'm going variable. Is there a specific term that's being recommended right now?
So honestly, if you're going variable, it doesn't matter if it's a 3 or a 5 year. Generally, there's only 3 and 5 years available. The penalty is the penalty to come out of it. So what you're going to look for is, prime minus whatever. You're going to look for that lowest rate that you can get. Right. So whether it's a 3 year or a 5 year, if you have to come out of it, it's 3-month interest penalty, which is nothing compared to the fixed rate penalty, which is usually interest rate differential. So, potentially a $500,000 mortgage might be a $6,000 or $7,000 penalty versus $20,000 or $25,000 on a fixed, right? So again, I'm a huge proponent of variable just for the flexibility in coming out of it.
Okay.
Now, what you want to look at is make sure that particular fixed rate that particular variable rate doesn't have a bona fide sales clause, or that particular mortgage doesn't have a bona fide sales clause. Because if it does, the only way to get out of that mortgage is to sell your house. Or whatever it is. So you want to make sure that you have that flexibility. And generally, the difference in rate is like 0.05%, which is nothing.
And I'm gonna leave the explanation of all of that to anybody who's actually interested. I say this very seriously. Anybody who's actually interested, this is why you need a professional who understands all of this, and this is why we've got Lucy here today, so that anybody can, you can tune in, you can understand what's going on, but B, you can, maybe you got some questions you want to reach out to her after the fact to understand what she meant by that. So I'm gonna kind of leave that hanging as a little carrot for everybody to, say, go and find that one out. Reach out to her and figure that one out. But looking at this then and going through a timeline of, again, when we talk about home ownership, right? Before we can even secure a mortgage, we need to find a property.
Yes.
But realtors want to know if a buyer has been pre-approved, and so that they understand the buyer's buying power. Yet banks and brokers won't give an official pre-approval without an APS, an agreement to purchase sale. And this is like which came first, the chicken or the egg, the cart before the horse. We can't commit to an APS because we don't know how much we can afford, but we can't get pre-approved without the APS. How does a buyer get pre-approved properly so they can even take the step to offer on a property?
That's an amazing question, David. And anybody that has spoken to me, or any conversation that I've had, it's about understanding who you're working with. It's gone on, in all honesty, truthfully, gone are the days where you go get a pre-approval, or, you as a realtor, you talk to your client and you're like, did you get a pre-approval? Oh yeah, everything's great. Don't worry about it. My bank's got me. Well, nowadays you have to work as a realtor. You have to work with a mortgage broker, or whoever it is you're working with, but you have to have a working relationship with them. You have to talk to them at each and every single property that the client is interested in. There's some tools that we have through Terranet. CMHC and Sagen are absolutely amazing with taking calls. Whether or not CMHC or Sagen are involved, or it's an insured file or it isn't, they are a wealth of knowledge. They're a wealth of information that we can tap into as mortgage brokers to call and say, hey, listen, do you guys have a problem with this particular property, with this particular area? Whether or not the client is insured or not, doesn't matter. They're just giving us an understanding of if there's an issue. So as any professional, we have to do our due diligence, like way far beyond what is normally required. Okay. And I've got anybody that's worked with me in the last little while knows I want to hear about every single property that your client and you are thinking of putting an offer in. Don't put the offer in before you speak with me.
Well, this is the idea, but
right? Call me.
You can't give us a number that says like, here's your safe or okay. I make an assumption here. Let me go backwards on that and say, I'm not going to say you can't give us that. The whole process of like that pre-app and that pre-qual and just to sit back and go like, Dave, yes, you can go and offer on that property. Mm-hmm. There's got to be a little bit going on in the background, but it feels in a lot of times that you can't get even to that point for me because I didn't bring you an APS. No, and I keep hearing that from people. They're like,
while I can see that is perhaps that's the message that is coming across to you guys. We can look at that. Okay. We can look at it and say, okay, this is based on the information that is provided, based on the information that you've given me right now. This is what I have. This is a best case scenario. This is a worst case scenario. At the end of the day, we're going to do everything possible to mitigate risk. But it's important that the realtor that we're working with and the client understand what that risk is. Because not everybody's in the same circumstance. And we have to remain open-minded about, everybody wants this 1.5% rate. It's gone. It's not coming back. Mm-hmm. And at the end of the day, even this 4 or 4.5%, or if we have to take this to an alternative lender to get this done, 5%, it's still worth buying. We need to break that down and we need to say, okay, this is what we would like to do, but this is what we can do. Right. Are you prepared? Are you prepared to move forward with a worst case scenario? And I can tell you that when it's broken down dollar for dollar and having a real conversation about what the risk is with that transaction, people move forward. People absolutely move forward. They don't stop there. It's understanding the client. It's understanding everything about the deal. And it's understanding as much as you can about the property.
And that's what I was going to say. I guess even before the property, you've got to understand the client. So there is a bunch of information you're going to get about the client to understand, again, cash flow, buying power, et cetera. And now you can present me a range, let's say being the realtor, here's the range, or a client, here's the range that you can probably be safely knowing you can go and offer on that property.
Absolutely.
With that, and then when I got my APS, then I can come back and go, okay, officially, I need you to go register, see if I can make this work.
Not quite. We're not quite at the APS yet. So what's going to happen is my process is this. We start with the client. We do the application. I collect all documents up front. Some people don't like it. Some people don't understand why. But income confirmation, down payment confirmation, separation agreement. Those are the three things, if somebody is separated, those are the three things that I collect up front. With those three things, I have an indication of what I can do. Okay. Gotcha. And by that point, I already have an idea of which lender we're sending this to. So then it becomes a communication between myself and the realtor. And it's, okay, I need to know where you guys are looking. I need to understand what our client is looking for, what they want. And is that realistic? Is that really realistic for their budget? So again, it's not just the relationship with myself and the client. It's a relationship with myself, the client, the realtor.
And I've heard that so many times from the mortgage side going like the realtor needs to understand the relationship here. Right. And I say the same thing to the mortgage side. You got to build relationships with the realtors. And I know you do a kick-ass job of that. I mean, hence again, when we bring up the buzz conference, just being there with people, how much support I see that you get from the real estate community out there. It's building relationships though.
And it's honestly, it's transparency. It is absolute transparency. There's, you got to give it to, you have to give it to the client and the realtor the way it is. It may not be what you want to hear, but this is what it is.
Okay, so here,
find a way to get it done, but these are the goods. This is what it is.
So let's say this then. Okay, so hold on. On that note, because that was a big thing for me to understand that is to go. So I don't need the APS for you to necessarily provide me with a range of what I could potentially do. A high and a low, Dave, as if you go here, you should be safe. I'm not putting that in writing for you right now, but I'm going to tell you based on all the knowledge I've got and what I understand about the industry and what I understand about you, this is kind of your range. Go ahead. Go ahead and you can start to do your search. Just keep me posted on what you're searching for. Let me know the areas and I'll continue to kind of advise and guide and go, whoa, stay away. Or yeah, go for it. We should be good to go.
Yep.
Right. Because now at least I got the safety net that says to me, yeah, you can go and offer on that property.
Yes.
Right. Because those things are happening fast right now. Right.
And again, it's about, okay, it's 9:00. We got to up our offer by $20,000. We got to call Lucy.
Okay, so this is my next one then. This is my next one. Whether I get the pre-app in writing and we just sort of said like it's not going to necessarily happen in writing at this stage, but it's going to happen verbally and it's going to happen based on knowledge, okay, and understanding the market out there. I make the offer on the property. The vendor signs back. I really want the property, so I try to figure out how to get a few extra dollars so that I can pad that offer. And just to where you were going there is, and I mean, my question being, how is it that so many people have been able to go back and get more money just like that?
You would be very, very surprised what somebody is willing to give up for that one house that they love.
But Luce, it's like
$20,000 from mom and dad. 20,000 from mom and dad. There's ways to borrow, very, very few options. I'm not going to say we can just go out and get a line of credit for $25,000, but that's why it's important for us to work with the realtor and the client at the same time.
Right.
Let's figure this out. And there are times where I'll just say, guys, we can't do it. We cannot go 20,000 more, period. Unless you can do this, we cannot go 20,000 more. And it's so hard to make that decision. It's so hard for me to say because at that time they just want it, right? And at that point it has to be, you know what? We can tweak this and we can tweak this. And if you pay this off, we can do this. Or if you call mom right now and say, Mom, I need $15,000 to make this happen. Can you do it? Most of the time we can get something done. I'm not saying it's possible every time.
Okay, but I mean, here we're talking, and I don't want to, downplay $15,000 or $25,000 in terms of the value of it, but I'm talking the 100, the 200. That person who thought I'm going to go offer on a 1.5 and I'm going to sign back at 1.8 because I just magically found another $300,000. Like but like seriously, I have asked like so many people this question. I want to know, and I'm not going to peg you to go. No. You know exactly where it's coming from. But just the conversation of it all, I think is important. Is where are people getting the money from? Like, I don't get it.
Bank of mom and dad.
$200,000, $300,000, $400,000.
I have a particular client right now, love her to pieces. I refinanced her mortgage in December, so she could pull out $400,000 to give $200,000 to each of her kids. We're actually in the middle of purchases right now. So
what's she doing?
She makes really good money. She's just
okay, but how many people are like that? That's what I'm trying to figure out.
There are more than we know. There are more.
Listen, they say the average, if you're renting in Toronto, you need to be making $90,000 a year.
I know.
That's a lot of money. Like, I mean, just, based on like average income, people are not there. I know there's people making money, but there's also a lot of people that are not making that type of money. So
you have to have combined income to make that at this point. For the most part, anyways. So
it's bank of mom and dad. It's
bank of mom and dad, 100%.
Wow. I've been hearing a lot of that. It's gifting.
They're gifting part of their inheritance, right? So they're not just gifting; that's part of their inheritance. And mom and dad's really, and I'm going to do the same thing for my kids when the time comes. You need $100,000 now. You don't need it when I'm gone. You need it now.
Yeah.
Right. And that's what's happening. And again, we're looking at cash flow. We're making sure that the parents are okay. But at the end of the day, a lot of people are tapping into, an early, what's it called?
Early inheritance.
Yeah. Yeah, it's happening a lot. And I'll do the same thing for my son when we have to. My daughter was, in all honesty, lucky enough to get into the market about 3 years ago. She bought a little condo, actually just sold last night in multiples. It was it was insane.
It's not. That's what I'm saying. So how did those people just get more money to go and buy that property? They were told they could buy here. All of a sudden they bought there. It's simply because like last minute they went, Mom, Dad, I need some money. Like,
I don't know how, it's bank of mom and dad, it's themselves, but I'm telling you, people are leveraging themselves quite a bit with the mortgages.
Well, that's the thing that gets me. It's like, you see, to me, I know there was a billboard there. It was like, if you can't like buy a home or something, like go find rich parents. Like we saw, that was, like, oh yeah, you didn't see the headlines on that?
No, I don't think I saw it.
Yeah, that's like that. There's like a billboard up for that right now. And it's actually getting a little bit of slack out there in the media.
That is really what's happening, though, David. It is.
That's the thing. Now, at a time, people were claiming that this was, all about immigration. I find it hard to believe when we look at what's been going on the past 24 months that like we're being fueled by immigration.
So I agree with that. I think that both factors play a huge part in this. I really do. Like, I want my kids to own a home. I want my kids to have something. It doesn't have to be a palace. It could be like my daughter's first place was a 550 square foot condo that she literally said to me, Mom, I got to get out of here because I've been in this condo for 2 years with COVID. I got to get out of here. Yeah. So they ended up buying a second, not a second. They bought their second home, just sold their condo, but they're up to here in mortgage. I mean, it is what it is. You either do
That's the killer.
Yeah. But
like, I've got a client of mine and I asked her and I said, they're going on offer on properties, everything else. And I said, like, how do they just keep doing that? She goes, oh yeah, my clients, no problem. If they got to go up 100, they go up 100, 200, no problem. 300, no problem. 400, no problem. Foreign buyers, just, again, sort of, there's some of the fuel as well, is that if there's a lot of money coming from overseas and they can just continue to dump it in, well, all of a sudden you get everybody else who's maybe local going, I want to buy, I can't afford to get there anymore. So we're getting this, this driving up of prices again, because these people have just a ton of money to throw down there. And I mean, that is definitely purely foreign money when it's getting to that point where like people have that much more money to throw in with no regard. I mean, that's obviously one of the factors driving all of this right now.
So I've got a couple of foreign buyers right now, and that's exactly what it is. You know what? We don't want to put the money down, but this is how much I've got. And they're just, I'll just get more money from back home. And I'm like, oh my God, can I get more money from back home too? I don't have a back home, but can I have a back home? Right.
So here, we just said that the average household salary, you need combined income, but we know that like even what we're looking at right now, it doesn't fit the average household expenditure.
Yeah.
Something about it doesn't fit. So when we look at carrying costs and cash flow, and like we talked about a few minutes ago, we've been sort of talking about here, are people taking this into consideration at all? Like, are people actually looking around like, the monthly nut that they're going to be on the hook for once they decide, hey, so I've already gone and taken a big mortgage, like bigger than I ever thought, probably bigger than my parents ever took. And even when they were getting rates at 19 and 20% back then, right? Mm-hmm. But I've taken a bigger mortgage than my parents have ever taken, like through the roof, blow my mind. I've gone and padded that maybe by getting a little bit of extra money from mom and dad or somewhere, just because I wanted to buy the property and went to multiples. Mm-hmm. Carrying costs. I got to tell you, that's where my biggest concern in this market comes down to, Lucy, is the carrying cost on all of this. How do people afford that? You got to be clearing $15,000, $25,000 a month just to pay for some of this stuff.
Yeah, you do. You do. And I'll be honest with you, people haven't looked at it before now. They haven't looked at it until we've seen this climbing interest rate environment right now, where it's like, okay, you know what? Groceries have never cost me for 3 people in my household $350 a week. Like, come on.
Right.
With that being said, I don't buy the steaks anymore that I used to because now it's $400 a month or a week.
Yeah.
Right. You have to cut back somewhere. And, as hard as it is, People will keep their homes. We will adapt to the rate increases. You know what? This month, you cannot go and buy those shoes. That's just life. You know what? You want this new, Billy wants a new bike. Billy, you're going to have to get this bike instead of this bike because it's $100 and mom and dad just can't spend $150 right now. Whoever plays hockey, and everybody knows I'm a hockey mom. I'm telling you, my kid had $350 sticks. You're not getting $350 sticks now, buddy. Not happening.
Well, look, cost of groceries. But you're bang on. Cost of groceries through the roof. Like, it's stupid for the amount of money we're paying for stuff. You come home from the grocery store and you realize there's certain things that have just literally doubled in price. Like, I think Jen mentioned the other day, she bought like a carton of cream, normally $3.99. It was like $8.99 now. It's like same carton.
Tomatoes.
Right? Hey?
Tomatoes.
Okay.
$9.99 for a thing of like grape tomatoes. I was just like, you gotta be kidding me.
Yeah, she told me about that too. I mean, now the scarier part is the fact that you go there and that's if they have the tomatoes on the shelf anymore.
Yep.
That's a freaky part, right? Now, that's completely separate to our conversation here today, there's some crazy, gas going up. There's a lot of things happening. And I'm with you by going, you may not be able to just, go and buy that pair of shoes, or maybe the hockey stick's not going to be the $350 hockey stick.
Yeah, you're going back to a wooden hockey stick, buddy. $29.99.
Is there something to be said that then says, like, why do you need to get into this bigger home to take on this crazy mortgage when you could still enjoy life, live in a home that you're in now, and still be able to do the other fun things?
Well,
I don't know.
The point to that is, and I lived in the big homes and drove the cars and went on the vacations, and I did that, and I find myself in, at this stage in my life in a tiny little townhouse owning 2 homes instead of 1. And I just kind of look at this and say, for me, it really is about quality of life. But at the end of the day, that big home that you're investing in, that is forced saving. Now, I'm going to be honest, and anybody that knows me knows I love my handbags. If I want to go and if I have the choice to put $400 into an account to save for my retirement or buy myself a new handbag, I'm buying a handbag. There's no question about that. But again, our homes and these larger homes are exactly that. There are savings. Okay. Mm-hmm. So is it a good thing to, step up and buy that bigger home? Absolutely. It's whatever. Where do you want your retirement to come from? Mm-hmm. And I'm never going to retire. I know that. I can never be at home twiddling my thumb. I can do it for a month or 2, but that's it. It's just not the way that I am. But at the end of the day, that larger home or that step up from, a 550 square foot condo with a beautiful terrace, by the way, to, a semi-detached on an oversized lot, you're talking like double the money. I want to say triple the mortgage, but that's their savings. It's an investment.
I think the big home is awesome. I think aspiring to do that, and it's a great point about the savings, 100%. So look at this then and say, for all the people that over leverage themselves, and we look ahead now, 24 and 36 months down the road, are those people who will over leverage themselves, are they the ones that start to cause maybe a little bit of a ripple effect of like things starting to get stagnated and that transition from the seller's market to the buyer's market, and the fact that people cannot necessarily maybe afford to continue making those payments? Does that make sense?
It does make sense. Absolutely. In that particular perspective, it's, there's going to be shift of assets. There's always a shift of assets when things like this happen. So, and I believe that educating and understanding, forget about what the interest rate is. What is my payment?
That's what's getting me, Luce. That's what it is. Can you afford to pay that?
But how many of us spend God knows what on coffee? Hello. It's coffee. It's like,
Are you a Starbucks drinker?
yes.
Grande venti lattes with no
Actually,
foam
I'll
and
be
extra
honest with
space and sprinkles and, drops
I
of this
got-
and sprays of that.
to be
Give me a
honest with
medium
you,
black
since I got
coffee.
my
Thank you very
Nespresso-
much.
Since I got my Nespresso, no, I haven't, to be
Okay.
honest with you. But if you think about it, Nespresso's, Nespresso can be more expensive than Starbucks.
I don't mess with those
Right?
machines. They don't like me. I press the thing down
Really?
and then it doesn't pour. And it's like, I throw like 3 pods out before I make a coffee. Talk about expensive.
Right?
But here, another scenario then. Okay. So we're talking about, achieving the dream of home ownership. We're looking at the scenarios there about getting financing, what kind of financing to be getting, to pay attention to carrying costs, interest rates, what that's going to do to affect the market in say 24 to 36 months. To me, that's a big deal. I really do believe that all of these people that are like literally way overextending themselves from a mortgage payment, I believe that in 24 to 36 months, as there's renewals coming up, they may realize that they went overboard on what they spent.
But I'll
It's an
tell you
assumption.
something. With regards to qualification, the stress test has been here for years.
Yep.
This is what the stress test prepared everybody for. So if we've been qualifying at, 4.79, 5.24, we've been qualifying at a much higher rate. Technically, you should be able to afford these payments.
Okay, but if I qualify 1.5 and all of a sudden I go and buy at 1.8 because I got 300 gifted to me, I mean, I guess it's not on my mortgage. I don't know. It's a lot of money. It's like here, but let's go to another scenario then.
Okay.
I own my home.
Mm-hmm.
I'm not looking to make a move. Okay.
Mm-hmm.
Although I might want to, but I'm going to sit tight because of prices.
Mm-hmm.
And because I've also built a ton of equity in my home over the past few years. So the question that I've got then would be, how can I take advantage and leverage the equity in my home to invest in another property, potentially an income producing property, or maybe a vacation home? How do I leverage this equity right now to invest and create more wealth for myself and my family without making the move?
Through a refinance. We can refinance your home. Now,
Is this the whole thing loaning against equity?
Yes, that's exactly what it is.
Now, is that just a broker thing or are the...
No, it happens it's been happening for years and years and years.
See, I've heard from many, and I could tell you personally, I've heard from many though, like they won't loan against equity. Like they don't care how much money's in your house right now.
Then there's an issue with income there.
Interesting.
There's an issue with income, and they can't actually qualify for the additional funds.
That's interesting.
Okay? But you can definitely refinance. Now, is it the right thing to do right now? If you happen to be in a 2.5% fixed rate where now you got to go into a 4%? Again, we have to talk numbers, dollars and cents. Mm-hmm. You have to have somebody that understands those dollars and cents and can say, okay, but let's look at this from a holistic perspective. What are you going to earn? If you're paying an extra 1.5% on your mortgage right now, how does it make sense to do that? Does it still make sense to put your eggs in 2 baskets as opposed to just one, right? Honestly, and this is, I know there are so many qualified people, it's ridiculous. So many qualified bankers, so many qualified mortgage brokers. But if they can't sit down and talk to you about dollars and cents and what this is going to cost you every month, what you're putting out, what you're bringing in, you're not talking to the right person, right? This is not about interest rate. This is about dollars and cents. And I tell people all the time, and I've been telling them since the rate started, how do can you afford an extra $500 a month on your mortgage? And they're like, oh, absolutely not.
That's my big thing.
But oh, Lucy, you got to come buy the cottage. I just bought a new Ski-Doo. What? You just bought a new Ski-Doo, but you can't put it on your mortgage? I just bought Lucy, you know what? I don't know what I bought. I bought a new boat, or I bought this new toy. And I'm sitting back going, what's wrong with this picture? Listen, I'm all about toys. I'm all about handbags. I'm all about shoes. I'm all about enjoy your life as much as you possibly can. Mm-hmm. But you know what? At the end of the day, our homes and our real estate, that's our savings. That's what we have. right? So sometimes we have to give up something for something else. And it's okay if you're not willing to give it up, but you can't have the cake and eat it too. Not right now.
Because there's only so much to go around. And I think that's the thing. And that's one of the things I'm trying to bring light to here is everybody just being cautious, because look, on the other side of things too, we see people that, agents that don't want to go show a property that's being offered at 2% to the buy side because to them, they're not making enough money. To me, I'm going, but hold on a second. Maybe that's the right property for your client. And so there's a lot of the whole thing, which money makes the world go round. I get it. But I also think that there's something to be said about, this duty that we all have to keep people safe, to help them see what will the future somewhat look like for them in terms of, again, cash flow, buying power. What kind of strangling are they going to do to themselves potentially? Or sacrifices might they have to give up, hence the handbag and or the jet ski or any of the other stuff that's there. What may they need to pass up in order to be able to get this? And I think that that's something people need to take into consideration because, again, there's not an endless pit of money just sitting around, although it really does seem like it for many people, which is like mind-boggling.
And we have to get to, as professionals, mortgage brokers, bankers, we have to get to understand the client as a human being, as a person, because just because you can have a mortgage, it doesn't mean you should. I mean, I remember when my kids were younger and my daughter was dancing and my son was playing rep hockey and rep baseball. We spent $20,000 a year on hockey, baseball, dance, music. Like you're sitting there going, where does this money come from? If I have a ginormous mortgage, I can't do that. So it's our jobs to make sure that our clients are getting into the right place. And sometimes that does mean sometimes that means I lose the business. You know what? Yeah. Don't get me wrong. I don't want to lose business. I don't ever want anybody to say, well, Lucy didn't qualify me for enough. But at the end of the day, just because you can have it doesn't mean you shouldn't.
I like that. There is a responsibility that we have on this side of the tracks to be helping the clients out. And I think everybody really needs to take that in consideration. So, overall state of the market right now, how long do you think this whole thing, just the pace that we're at, keeps going? And I'll just come straight out and ask the question, say, are we in a bubble?
I do not believe we're in a bubble, and I never did. And the reason I don't believe we're in a bubble is because the definition of a bubble is something is just, blowing up with hot air or cold air or whatever. And there are reasons that our economy looks the way that it does. There are reasons that the real estate market are as high as it is. There are, there's the whole supply demand issue that goes way beyond interest rates, and it goes way beyond cash flow. And, we have some serious issues here. And I know, we talk about immigration and you say, well, I just don't see it. Where are we going to put 400,000 people that are coming in this year? Where are they going to live?
We've got lots of it. No, we don't have any inventory. That's a great question.
Exactly. Right?
You know what? I'm with you. It doesn't make any sense.
It just, we got to kind of ride this roller coaster and see what happens. But you have to be around professionals that understand dollars and cents. That's just the bottom line. And yes, we all want to get the deal done. And I want to do everything I can to close that mortgage and to help my referral partner, my realtor referral partner make that sale. But can't. And then there are times where if we push just a little bit harder and we look for one more, tweak the deal a little bit more, get another $10,000 or $15,000 from mom and dad, and we make it happen. But we have to be open-minded, and we have to be open-minded as professionals while doing our due diligence and taking care of our clients. But it's opening up the clients' minds as well to saying, okay, there's another alternative. I can't have it this way because I just can't have it this way. But you know what? Maybe we can do it this way.
Well, I was just going to ask you about that, right? Like what happens if a realtor is working a deal? They're running into the roadblocks when it comes to financing. And we've talked about a few of these already, little hacks that you could do. But I'm just wondering, what little hacks are there available to them that maybe we could share to help them expedite the process? And I mean, I'll just sort of kind of go back over, but it was, paying attention to the numbers, first of all, seeing if mom and dad have some money, speaking to somebody who actually understands, somebody like yourself who understands the money and the financing aspect of things. What are the things there? Like we're into the final moments here of working this deal. We've got to get this extra little thing. What kind of things should a realtor need to be paying attention to? I mean, you could say a consumer or a home buyer as well, but specifically the realtor, because, and I'm going to go right back to like the top of our conversation right now, when we mentioned about having the right people and the relationships between realtors and mortgage brokers. I've said to the realtors many times, and I'll continue to say this, it's like you're playing a game with marionettes, right? And you're pulling strings. You've got to talk to the mortgage broker. You got to talk to the lawyer. You got to talk to the, the home inspector, the stager. You got to talk to the clients. That's the role of the realtors, really to, make all this stuff kind of work in tandem with each other, right? Because your job is the money job. It's not the home inspection job or the signs or whatever.
Yeah.
The realtor needs to understand that. But sorry, going back to where I went there, I'm the realtor. I've got the right person, but stock. What do I do?
There's no magic potion. Honestly, it's have somebody that you can talk to, have the support around you that you need, and understand when part of that value is emotional value and part of it is actually quantifiable value in a property. Okay, that's huge right now. Everybody's like, I need this deal. God, I haven't had a deal in the last 3 months or the last 2 months, and this is going to get me my vacation in the summer. You have to be able to remove yourself from that. And we all do it. It doesn't matter how much business you do or you don't do. We all need that next deal. But I can guarantee you that if you push into something that is not meant to happen, that is not right, the whole deal is going to fall apart after you did everything. Okay, you have to be realistic about why this should happen. And is it possible? So, is there a hack? No. I wish I could tell you there is, and just do this. But the best hack is know who you're dealing with and make sure they're accessible for you at 10 o'clock at night or at 9 o'clock at night when you need to know if you can do that extra 10,000. That's what you need. And please, I implore people, if your broker or your banker has said, don't go there, I implore you, don't go there.
Don't go there in terms of price point.
Yes.
Okay.
Don't go there.
Cool. But
honestly, make sure that you have the relationship with your mortgage broker or your banker, and you actually trust that they can do that extra little bit. Okay.
That's the key.
There's sort of that there's a fine line with pushing things, a little farther, but don't push them too far. Just make sure you know who you're dealing with.
Okay. So okay, let's go here then. What about, and I mean, one of my favorite topics when it comes to marketing, and building the mind share, but what about marketing? What about messaging? What kind of messaging should we be sharing out there to people? Is it a good time to buy? Is it a good time to sell? A good time to invest? Would you be telling people about, the fact that they got a ton of equity and suggesting that they explore how to leverage it? Like,
absolutely.
What are you saying to people right now to help them think about real estate financing? And what can we almost echo back to anybody else who's leveraging this messaging right now to kind of go back to their people to, try to pull in deals for themselves as a realtor, in the business, but at the same time, helping their, say, buyers actually finally get into a place, or that seller who does want to sell but can't find a place. Like marketing messaging. What should we be saying out there to people? What are you saying?
Educate yourself. Talk to the people that will talk to you. Seriously. Because I had a call this morning from a referral partner. He's like, this person was absolutely adamant to talk to their banker. Their banker is telling them this. And I'm like, it's blowing my mind because, they're not given the right information. And it's every circumstance is individual. So it's really, really hard to say, how do I know as a realtor, as a professional, how do I know I can trust that person? How do I know that what they're telling me is the truth? Right? You got to work with them. But you have to, there's really something to be said about the right marketing message in educate yourself. Okay. The reality is, it doesn't matter how many videos I would put, and I hate videos, by the way, you know that, but it doesn't matter how many videos I put out there.
Sidebar, you're doing great with video today, by the way.
Oh, well, thank you very much. But yeah, it's just not my favorite thing to do. I don't like talking to people. And I feel like I'm talking at people oftentimes, and I don't like that. I love a conversation, but
yeah.
So getting back to your question there with marketing, I think it's really important to make yourself look like the expert, but be the expert. My opinion can be very different than somebody else's. And the style of how I do things is not for everybody. And that's just what it is. But when it comes to marketing, what do you want people to see you like? What I want people to see me like is I know a little bit, because I think I know a little bit, but I want to be approachable. I want somebody to be able to come to me and say, call me. The market that we have right now is not just about a post. You're not going to get what you need from a post. You're going to get what you need from talking to somebody. So I always, I try for my marketing to be educational, but inviting, right? So I think that we're all good with words. We're all in this for the most part for the right reasons, because we want to help people. Let's introduce that online, but find a way to get it offline where where you're actually having a conversation. That's, to me, the best marketing you can get.
You are talking my language, online to offline. We talk about that a lot. I actually talked about that at the Buzz conference as part of the whole idea, but that's really what it is, right? We're going online to try to, build mind share, connect with people. From there, though, really get the conversation offline and start to build a relationship.
Yep.
Right. This is the biggest asset of somebody's entire life. They're not just going to deal with anybody because you put up a post, as you just said.
Exactly.
Now, Luce, you've been in the business for like 20 years from what I read of the bio.
Yep.
Right.
Banking and brokering for 20 years. Yeah.
There you go. Okay. Can I ask which company you're with now, and what can you share with people about, your business specifically? Like, I just want people to understand why, outside of like the past almost 53 minutes of you sharing all these insights. And I might just say to everybody, that's why. Like, you can see she knows what she's up to. But how can we encourage people? Like, why Lucy?
So I'm currently with Dominion Lending Center's Biocca Financial. And truthfully, through COVID and before COVID, it was like, I'm trying to be everywhere, trying to be everything to everybody. But one of the things that COVID has really done for me in my business is it's helped me put the right infrastructure in place and the right support system in place for me to support all of my referral partners properly and my clients properly. But me, because honestly, at the end of the day, there's a human being on the end of every single transaction. There is a reason for every single transaction. And I'll be honest with you, we are all in this to make a good living for ourselves. And I do that. I'm in it for, that's one of the reasons as well. But at the end of the day, it can never be because of that. Mm-hmm. It has to be the people you're working with. It has to be the referral partners. And you know what? I know that they need this. So how can I contribute closing this, with them and for them? And for the client, how do I make this happen? Because, they've got 2 kids over there that are currently sharing their bedroom, and they're climbing on top of one another to go to sleep. And what they really need is they need a 3-bedroom. How can I help that family get that 3-bedroom? And again, just because you can have it doesn't mean you should. So there's that balance of both of those.
So the why, and for everybody tuned in, I'd say a lot of the knowledge that you bring to the table, but there's obviously a deep passion in helping other people. And
Absolutely.
when that's the root of it all, good things are going to come out for everybody involved. So I think that's absolutely powerful. So what are you doing on a daily basis? And I do this in like a short form because I could have a whole episode with you on this stuff. But what are you doing to build mindshare for yourself? I mean, you just mentioned like not loving the idea of video. I know you do participate in social media. You're obviously at the conference the other day, so you're doing the in-person stuff. You just talked about how important it is to build relationships with others. Are you on the phone a lot with people? Are you networking with a lot of people? Like, what's sort of that just MO on a daily basis?
So yes, I just have this. I have this belief that when you do things for the right reason, the right people come to you, and you go to the right people. And if you're doing things for the right reasons, it's just a recipe for success. And it's being available as well. You need to be present. How many times does somebody say, well, my mortgage broker can get a deal done, but they're not present? Just before COVID, that was the main thing that I realized I wasn't enough of. Mm-hmm. And we all look at our business and it's like, we're all in the thick of it. And we don't think about what am I not doing? And while I was, you attempt to be everything for everybody. And at a certain point, you kind of have to be everything to everybody. But at the same time, you're not present. So it's about putting the right things in place to make yourself present. What do you have to do to be there? I had people working in the background and doing what I needed to do at the Buzz conference so I could be present for, and that's, I just do my very best to be present. Does it take 2 hours to return a call sometimes? Absolutely. That's life, right? But does it take a week to get back to a client? No way.
Cannot.
No way. Can't happen. So.
How do you know it's been a successful day for you?
Two things. And I ask myself this every night. Did I put a smile on somebody's face? Because that's important to me. And what did I do to grow my business? Did I make one phone call? If I made one phone call to somebody I wouldn't normally have called, that's a win for me. Okay, we all, like I said, we all get busy. But what did I do today to build my business? And sometimes I think to myself, I didn't do enough. Get your notebook out, write down what you didn't do today and what you're going to do tomorrow and do it. That's my notebook is my best friend. I have them all over the place.
And one of the most powerful things we have right there, right?
Yep.
So, Lucy, give me some final words, maybe some tips, something that everybody tuned in can go out there, help themselves. I mean, one, we talked about achieving the dream of home ownership, and we've gone through some amazing steps today, and you've shared some very valuable insight. We've also talked just tip of the iceberg on marketing and messaging. Again, our audience, obviously very much within the real estate industry. So we've got a lot of realtors listening to the program right now. What can everybody do to just get out there and help themselves build a lot more mind share so they can get more market share?
Honestly, be yourself. Go out there. Do what you enjoy doing. We talk about marketing. We talk about networking. We talk about door knocking. And I know people hate that, but believe it or not, it worked for me when I started a mortgage. Door knocking. It does. It does. Yeah. And, but the best advice that I can give is figure out what you like to do and do as much of it as you can. Okay. But push the envelope a little bit with something you're not comfortable with. Okay. Because that one thing that you're not comfortable with, that you're terrified to do, maybe that one thing that sets you apart from the next person. Right. So whatever it is, it could be anything.
Where can people find you?
Everywhere. No, I'm just kidding.
Yeah, there you go.
You can email me, text me 647-888-1210. My email is lucy@lucyknowsmortgages.com. My website is lucyknowsmortgages.com. It's some pretty amazing branding that one of my clients came up with. So it's not even like my own thing, but it was, that's a whole other story we'll have to get into one day. But yeah, that's it.
Very cool. Well, I encourage everybody to connect with Lucy, as you could see today, spending some time with us here on the Mindshare podcast. She definitely knows what's up when it comes to money, financing, real estate, and helping people, well, just achieve their dream of home ownership. So, Lucy, thank you. It was very insightful, knowledgeable. You're obviously a professional. We've known each other a number of years, and I thank you sincerely for making the time to join us today on the show.
Thank you so much for having me. It's been a pleasure, and I'm really so glad we got to catch up a little bit. It was great.
Likewise. Thank you. You're either listening to this on iTunes, iHeartRadio, Google Podcasts, Stitcher, and or Spotify. Or maybe you went to my website, mindshare101.com. And while you're on my site, make sure to download your free copy of the Ultimate Marketing Bundle for Realtors. This is a 31-page ebook packed with a ton of tips and tricks for you. Plus, there's a ready-to-go 90-day social media content calendar to help you build more mindshare so that you can get more market share. And if you want to talk about personalized one-to-one coaching to help you get to your next level, just get in touch with me. We'll set up a free consultation call, learn more about what you're looking to achieve and how we will help you do just that. Also, don't forget that our push to 100 is on. All you have to do, this is super easy, is go over to ratethispodcast.com/mindshare101. Again, that's ratethispodcast.com/mindshare101. And if you haven't yet, connect with me on Facebook at Mindshare101 and on Instagram at David Greenspan 101. I want to thank Virginia Munden and the Buzz Conference for sponsoring today's episode. Be sure to visit their website, www.thebuzzconference.com, and follow them on Instagram at The Buzz Conference to keep tabs on all of the awesome events they are always hosting, along with getting the latest copy of the Buzz Digital Magazine. And of course, I want to thank Kids Keep in Touch Systems for sponsoring today's episode. If you haven't checked us out yet, just go to my site, mindshare101.com, and click on marketing. This has been another episode of the Mindshare podcast. Thank you for tuning in.